Which investments are likely to do well in 2024? So in this video, I'm going to talk about which investments are likely to do well in 2024 and beyond. And before doing that, go over to adamfayed.com, especially if you're an expat or a high net worth individual, and see how I can help you. Now, 2024 is likely to be the year of interest rate cuts. Some people, like Ray Dalio, think interest rates won't fall as much as expected. Others believe interest rates are going to really fall off a cliff. But either way, interest rates are likely to come down. So, which assets is that going to be bad for? Fairly obviously cash and also money market funds. Money market funds have really this year seen a record inflow, but they will be affected obviously if interest rates go down. And in addition to that, I think what we can also say is if interest rates in the US go down, the strength of the dollar might actually change in the coming years. So the US dollar index hit the highest level since 9/11 last year. It's fallen a bit since then, but the US dollar is still relatively strong. So US stock markets, whilst they might do well if interest rates go down, maybe won't do as well as some markets, because right now those other markets are being dragged down by a strong dollar. Because if you think about it, if you're a company in Vietnam or Bangladesh or China or whatever, and you're growing by 20 or 30%, but your currency is going down by 10, 20, 30% against the dollar, that's a drag on US dollar-based returns. And by the way, I'm going to be talking more about this topic in my forthcoming investment guide for 2024, and you can get that by subscribing on to my email list on my website. So that's adamfayed.com/subscribe. But the key question is, which investments are likely to do well in 2024? Now, obviously, nobody knows in advance of time with any degree of certainty, but based on the information we have, it's likely that the following assets will do quite well. So now, bonds are one key area that could do very well. So long-term government bonds, like the TLT index, which follows the 20-year plus US Treasury bills, have done very poorly as interest rates have gone up. But if interest rates go down, that index is likely to do well. Likewise, even A-rated corporate bonds are likely to do well if interest rates go down. As mentioned, non-US stocks are likely to do better if the dollar gives up some of its strength in the next few years. But we have to look at other areas as well. So, for example, real estate investment trusts, known as REITs, are likely to do well because real estate is very sensitive to interest rates. So with interest rates being higher, REITs have struggled. But if interest rates go lower, REITs are likely to do better because the projects are more likely to make sense. But when it comes to the stock market, what kind of sectors are likely to do well? Well, small caps and also technology stocks are more likely to do well because they are very sensitive to interest rate falls and rises. So we saw last year how the Nasdaq got hammered after interest rates went up. This year it's gone up quite well, and the expectation is that obviously interest rates are going to go down. So it might be very good for tech stocks and also the small cap stocks as well. I would say alternative assets are less likely to be affected because a lot of alternative projects get private finance, so it doesn't really matter if interest rates are 3% or 5% if you're needing to pay 10% or 8% anyway to get to those projects off the ground. So in summary, if interest rates decrease, it's likely to be good for most asset classes. Warren Buffett once said that interest rates to asset prices are like blood or oxygen to the body or something like that. I can't remember the exact quote, but basically lower interest rates will be good for stocks and bonds and REITs long term, and especially certain sections of the stock market. However, some of the trends I foresee, like the dollar going down a little bit and emerging markets and non-US stocks doing better, it might take some time to come about. It might happen next year or later on. But either way, there's a lot of opportunities to come. And as mentioned before, I'm going to be doing a guide for email subscribers in the coming weeks, so subscribe to see more.
Anyways, I'm very, very pleased and positive to say that I believe I've picked the right one. The results in the last couple of years have overreached my expectations by far. And I see no reason why it should not continue. Of course, I can highly recommend him as your financial advisor for now and for the future, because hesitating is missing out.
Obviously, the best result in market right now is Adam.